The Polkadot ecosystem hasn't been as vibrant, I think, since we left, if you will, in 2021. Therefore, we haven't really done as many deals there the past couple years. So we've been more focused on Telegram, on Solana, and some Avalanche.
Hi guys, my name is Jack.
Chief Investment Officer and founder of Hypersphere Ventures. Hypersphere is a leading multi-strategy crypto fund targeting asymmetric opportunities across both liquid assets and venture capital. They've backed some of the most impactful projects in the crypto space. With their first two funds, Hypersphere generated over $600 million in profits from an initial $50 million investment. Before founding Hypersphere in 2020, Jack was part of the founding team at Polkadot, where he led their business development.
What was going in your head when you were thinking about that sizing decision?
There's three ways, right, funds or hedge funds can kind of outperform structurally. One is illiquidity, one is concentration, and one is leverage. So, and if you do more than two.
But through what are some of the qualities you look for in a founders?
If I'm meeting with a founder and I'm the one leaving energized, I think that is a pretty good indication that this is a high energy founder. You know, if it's attracting me, I'm sure it's attracting other people as well who will want to invest money or invest their time and join the team.
Yeah, can you share a moment in your life that changed your approach to investing, or maybe life in general? Like,
part of the reason we didn't lean as much into the market as much as we should have in 2023, and this is a mistake as an investor, is, blood in the streets, go shopping kind of thing. And, I'd been through a founder breakup. I'd been through, a real breakup. I had been through leaving the Polkadot ecosystem.
Are there any trends or practices in crypto at the moment that kind of frustrates you?
I think VCs need to do a better job of basically demanding rights. I think they need to be on boards more often. I think they need to have some transparency more into financials during those board meetings. I think they need to have more transparency in terms of the founders selling secondaries into rounds. When you hear about something, if you're going to conferences and you're on Twitter and you hear about it, you probably aren't too late. So go ahead and look into it before writing it off as, oh, I'm too late, or I missed it, or there's nothing there.
Hey Jack, welcome to the Open Metaverse show.
Thanks for having me, Eddie.
You're one of the special investors who works in the tranches, have done amazing returns. So wanted to use this podcast to kind of uncover that and decode that. So to kick off things, why don't you tell our audience a little bit about who is Jack? How did he got into crypto?
Full time in the industry, I got into crypto in early 2018, and that was at the Polkadot project. I was in the early team there and helped lead their marketing and communications and business development. And that was through the launch in 2020. And I launched Hypersphere in 2020. That's been 4 years now, and we've launched 4 funds. And some of the funds have done very well. Others we've learned lessons on and haven't done as well. And overall, we've come to return, $600-700 million to our investors, and currently manage about $250 million, 10 employees. I'm based in Europe, and the rest of the team's based distributed.
So whilst you were working in Polkadot and in the position of marketing and business development, what were some of the lessons and things you learned that translated into you becoming a good investor or getting that eye for good investment deals?
My career has really been focused on looking for the next Ethereum. So that's why I joined the Polkadot project and was excited about their prospect of becoming a new layer 1 platform. And all I had to at the time to really invest was time, and because I was just out of college. So now we have a fund, and we can invest both time and capital in looking for the next Ethereum. And it turns out it looks like it's not Polkadot, but Solana or other platforms. I'm here in Dubai recording this with you for the Telegram Gateway Conference, and we're excited about that ecosystem as well.
Yeah, we'll double tap on all of the ecosystem in a moment. So before you joined Polkadot, what were you doing and what was the inspiration to get into crypto?
Crypto is one of the most intellectually interesting types of industries that's come about in the past 20 or 30 years. And it's fundamentally new, which not a lot of other things are. And with being new, there comes a lot of opportunity and a lot of uncertainty and a lot of excitement and volatility, the things we all experience day to day. And I also have always wanted to be an investor. So I was the guy buying stocks early and starting the investment clubs at school. So I felt like my 2 or 3 years at Polkadot gave me a good MBA, if you like, in working at a foundation in crypto, because you get to touch everything there, from the communications to the fundraising to helping projects build their teams. And then I was like, great, so I can take this and build a fund around it.
So initially you started off as a Polkadot fund. So tell us more, what are you guys doing? Like, are you like, I know since then you have diversified your strategy. So I want to learn about that story. How did that transition from being Polkadot oriented and focused and then investing in other platforms? And
Right. So yeah, as you mentioned, I was in the Polkadot ecosystem and launched the fund directly out of the Web3 Foundation, in the sense that I co-founded it with one of the co-founders of Polkadot, Robert Habermeyer, and our first investor was Web3 Foundation. So that was where our connection was, our capital was, and some of our early deal flow was. By the end of 2021, I would say, we started to invest a lot more, or at least start to build relationships with other ecosystems. So we received investments from Solana Labs, Cello Labs, Near Foundation, Ava Labs, and a bunch of other L1 foundations that we were really excited about partnering with to invest in the bridges that connected these ecosystems, XLR and Layer 0 and others like that, as well as applications and infrastructure on these other ecosystems. So I think a challenge for us in the early days was saying, hey guys, we're not just focused on Polkadot, but we're also looking at these other, the blockchain industry at large.
And how would you pitch that? How would you pitch that we're just not focused on Polkadot? We're looking into other ecosystem. How would you push the value add and kind of convince them?
Yeah, I mean, it was trial by fire, in the sense that we had to just prove that we were able to add value to projects that were in a rival at the time, like Cosmos or Solana or something like this. So luckily, the seat I was at Web3 Foundation gave me a lot of opportunity to build relationships with other ecosystems, because we hosted events like the Web3 Summit that were agnostic and so forth. So I had those relationships already, at least a budding relationship, and was able to form them and hopefully continue to improve them.
What do you think about Polkadot now? As an investment, or do you have a thesis around that, or do you feel like there are other ecosystems that are in a better position?
Yeah, so the Polkadot ecosystem hasn't been as vibrant, I think, since we left, if you will, in 2021. Therefore, we haven't really done as many deals there the past couple years. So we've been more focused on Telegram, on Solana, and some Avalanche and others like that, and then kind of other applications building there.
Yeah, one of the good traits about being a good investor is having that adaptability, knowing when the thesis is correct or when the thesis is wrong, it's not working out. So I kind of feel like you have done that really well in terms of knowing where the next trend is or knowing where the next product market fit is. We also had discussion around some of the liquid strategy you guys are doing, some interesting strategies there as well. We were discussing about trend following strategy, basis trade, and I was reading about Atlas Fund. So yeah, let's just double click on that. What are you guys doing on the Atlas Fund side? What are some of the strategies there, and how are you kind of looking at the investment vehicles from different perspectives now?
Yeah, so since we've launched Hypersphere, we've always had a venture strategy and a hedge fund strategy. So we continue to this day to have both. And the venture is very focused on early stage projects, whereas the hedge fund is focused on liquid tokens, or as of February with the new launch of Atlas, also quantitative strategies. So the idea with specifically touching on Atlas was to kind of have this barbell strategy where I'm focused on doing what I do best, which is identifying early ecosystems, building the relationship, and investing in that and investing in the token. in helping if I can, and really concentrated bets there. And then the other half is more lower volatility strategies that are very liquid, that can still generate high, sharp, low volatility returns. So still, we hope that beats, for example, private equity or other hedge funds that you could get in the alternative asset space, doing so with our expertise. And we brought on a couple folks from that had previously worked at Millennium and Bridgewater to help with that sleeve. And then I help manage that, but I also really focus as well on identifying these early ecosystems.
So in terms of the barbell approach, how would you kind of split the investment allocation in terms of percentage into like quant strategies, ecosystem/liquid positions, and early stage venture side of things? Kind of like multi-asset strategy, but how would you kind of divide it in terms of percentage allocation? Do you think what's the optimum?
So we seeded the fund with our own capital, and so my optimal distribution was half because that seemed pretty easy. And
so half on the quant side of things and half on the early stage.
Medium, late stage. I mean, these are things like the Solana round that was done earlier this year. These are things like, Worldcoin, Ethena, Telegram Ton. So these are liquid tokens. Yeah.
So one of the beauty about venture investing is there are few investment that kind of returns the fund. So in terms of Hypersphere, what were some of those investments that kind of returned some of the earlier funds? Mm-hmm. And maybe walk us through in terms of what were things that were discussed in IC, what kind of gave you that conviction and then ultimately led to amazing returns that you could distribute as well?
Yeah. So big winner for us was Polkadot. Yeah, we were in 2020. There were a lot of other ICO type of things as well, like Avalanche had one, and Solana, there was a cliff also in, I think, December 2020 that was very feared, and you could purchase SAFs for $1 or less at the time. So we participated in a lot of those as well. And then on the liquid side, we were participating in things like Luna, things like Kusama, and while those didn't end up being the things that everybody hoped, obviously, we were in late 2021, early 2022, we focused on distributing profits.
You guys also invested in Ethena, say that also did really well. Maybe walk us through some of those investments as well.
Yeah. So out of our latest venture fund, we invested in Say and Layer Zero and some others that we're really excited about. So touching on Ethena, it feels like really a true DeFi 2.0, 3.0, whatever you want to call it, founder with a guy leading the charge. And now he's looking to build a chain and an ecosystem. And there's other projects using USDE, which is the stable coin of that DeFi project, as a collateral asset. And in addition to centralized exchanges that are top 5 exchanges like Bybit, from that product alone, I think they have 450 or 500 million in USDE collateral being used there, and somewhere between 2 and 3 billion of collateral asset for USDE. So USDE gives you yields natively from the staked Ethereum, and then you short a perp against that, and typically funding rates are positive. Yep. So you get that combined yield, and then it's also a stable coin. So you get the combined perp and staking yields, which is really nice. But he's, that's impressive. But what's even more impressive is talking to the founder and learning that they're building a whole ecosystem around it, and they're not just going to rest on their laurels because they've had great success. They're going to continue building. And so whenever I think about Ton or Worldcoin or Solana or AVAX or some of these, is the founders and core team are not slowing down. They're doubling and tripling down. In many cases, like a Pavel or a Sam Altman, these guys are post-economic, and they don't necessarily need to make more capital. So that's not why they're doing it. They're doing it to win. They're doing it because they believe in their vision, and they're attracting enormous.
So how was the IC process like on the Ethena side? Because this was done, it was tried before, like on the decentralized side of things. They were doing it on centralized side. Like there was a project called UXD. So walk me through, what was the discussion? I see. Was it like when you guys saw that deal, it was very obvious, or there was a consensus, or like what was the discussion? Was it like there was a split decision and somebody had a higher conviction and then the decision was taken? Like some of the investments you mentioned, like Say and Ethena, typically was it like consensus there on the IC side of things, or was it there like one person pounding the table, look, I want to do this investment, these are X, Y, and Z reasons?
Yeah, so how we run a small investment front office, and the way we do it is exactly how you described, where if one person is pounding the table, willing to put their reputation on the line for it, we tend to do that. I'm the final decision maker with investments, of course, and the buck stops with me as the founder and GP. But if in this case, one of our analyst investment partners was coming to us and saying, hey, we really like this deal and wanted to size it even bigger. So that would have been an even better decision.
And when you think about sizing, like when you pulled that trigger, how did you think about the sizing? Because there was a little bit of uncertainty, there is a bit of conviction. What was going in your head when you were thinking about that sizing decision?
The Ethena deal was, so when I guess taking a step back for sizing generally, I think there's three ways, right? Funds or hedge funds can kind of outperform structurally. One is illiquidity, one is concentration, and one is leverage. And so, and if you do more than two, then you can easily, you can turn over.
It's an investment trilemma, the sizing trilemma.
Yeah, you can't do all three. Two is even sometimes risky if you're very concentrated and illiquid in a hedge fund structure, and people can get liquidity. That can also not work. 3 Arrows, I think, had all three with their GPTC trade, right? So I really like the concentration one. I don't do the leverage one much. You don't need to that much in crypto. Crypto itself is leverage in the way it's structured and the nascency of the asset class. So I don't really touch that one very much. So we mostly focus on the concentration with some amount of illiquidity that we're happy with, given the fact that some of these assets are here today, gone tomorrow. And so you have to be careful about that with these kind of more liquid tokens, some of the ones I've mentioned. And that's why I really like the founder to be like, who do I want to be on the cap table with? Who do I want to be, married to for 2, 3, 4 years? If you made the bet any time before today, the past 10 or 15 years with someone like Sam Altman or with Elon Musk or Pavel Durov, you typically can sleep well at night.
Yeah. Let's discuss those projects. You mentioned earlier that you did a lot of OTC type deals in Solana, Ton, Avalanche, Worldcoin, more focus on the ecosystem side of things. Yeah, what was the thesis behind taking those positions in these projects versus there are other options out there as well? So what kind of convinced you, apart from the strong founder, what were some of the things that you were seeing, also given your experience in Polkadot, that you thought would work and it actually has? So what were some of those trends or some of those themes that you were looking in and that kind of helped you build that conviction in all of these positions?
Yeah. Well, with Solana, we were very interested in the ecosystem, and we're talking to the foundation in late 2022, as we were starting to go through the tumults of the end of that year, and ultimately didn't get to investment in late 2022. Obviously, wish we had at that point. It really took us until 2023, the first half, before we started to go, okay, right, FTX and Alameda, some of the biggest builders on backers of that coin, right? SBF famously saying, sell me all your Solana at $3 or go out, F yourself. Yeah. Them being gone and that being a crucible moment for the ecosystem, and then it growing out of that, right? Led by Anatoly and Raj, but also the whole ecosystem really building through that. By mid 2023, you were able to go, okay, right, let's take stock of who's still here. Let's talk to people we trust at some of the major service providers in the space and exchanges like Coinbase. And I remember just a couple of things, right? There's all this crap you get all the time on Twitter and from talking with people all the time, that's noise. But then it kind of accumulates, and then there's these important conversations you have. I think I was at a Coinbase dinner, maybe Q2, Q3 of 2023, and I said, okay, what's the best ecosystem that you guys are seeing? And one of the protocol engineers, Victor Boonin, who's a great guy, said, there's two real ecosystems right now. It's EVM and it's Solana. And I was like, okay, that's a big data point for me, because I really respect his view, and obviously his perch is where he sits is seeing that. And so then I went to Breakpoint as well. So we bought a little bit, went to Breakpoint, and I saw
and when
that.
you say did you buy it on Liquid, or you also did OTC as well? Like, there was some SAF that were trading at $1, like all of that stuff. Did you also engage with that, or was it mostly Liquid?
The SAF to the dollar thing, the reassignment thing, the OTC deal was in 2020.
Yes.
So that was a couple years before.
Yeah.
We had done that.
Okay.
And that worked out well. We didn't hold until 240 or whatever it went to. But it, that was the right call on that. But no, I'm talking more about the 2023 rebirth, Phoenix from the ashes. Yes. People thinking Solana was dead, including myself. I was an avid Polkadot supporter, and that took me a second to unbrainwash myself, if you will, from being so focused on one ecosystem.
Yeah.
But by late 2023, we were not all in, but pretty darn close to all in on Solana. And Breakpoint, I remember sitting at a dinner as well. And there's a lot of smart VCs there. We were all at Breakpoint. We're all there in Amsterdam. And I go at dinner, there's like 10 or 15 of us. And I said, who at this dinner owns enough Solana? You're seeing a lot of great things here. Do you feel like you own enough? And nobody raised their hand or said yes. So I left the dinner and got some more. So that was fun. Yeah.
Yeah. Apart from Solana, you also did the Dawn thing, the Worldcoin position. Walk us through that as well.
So Worldcoin was another one where we've been following it for a long time. I think we invested the first time in the Series A, perhaps in 2020 or 2020, early 2021.
What was the valuation then?
So they had a $200 million round, which we weren't participating in. Multicoin and others were in that. I think we were in the 1 billion 10 cent round, and obviously already a high valuation. With Worldcoin specifically on the valuation thing, a lot of people get scared about the FDV, but those coins only get minted if eyeballs are scanned, if people are using the service or uploaded into, they're downloading the app and using it. So the FDV on that one specifically, it's not predetermined, unless it's almost like if the FDV is realized, it's super successful. And if the FDV is not realized, it's not, because then they failed in their distribution strategy of getting the orbs distributed and people scanned into the identity system. So the idea there was nothing we had seen before. They're using a physical orb to prove that you're human by scanning your eyeball. Yeah. And then they're incentivizing that through the distribution of Worldcoins. And now they're building this whole ecosystem where they have an L2 built on optimism. And real projects, venture-backed projects, are starting to raise very successfully. Sapient AI last week, I think, announced a raise of $10 million led by Variant. And so we're expecting and hoping to see a lot more apps there. I was in San Francisco 2 weeks ago to see Sam Altman give his speech about Worldcoin and see how involved he was. He was around all day. He came to dinner with some folks afterwards, and he was extremely enthusiastic about it. So, I think if we can get a lot more people, if their new distribution strategy, their new orb is successful, we'll see a lot more people onboarded. But it was differentiated. It's led by one of these visionary founders, and working on a massive problem that really you can't benchmark to anything else. You can't say, oh, right, well, this is valued at that, so Worldcoin should be valued at that. There's no such comp.
Yeah, they're getting a category of their own.
Yeah.
Do you think a lot about the demand side for Worldcoin? On the supply side, they're great. They've created millions of wallets. What are your thoughts on the demand side? I think that's yet to be seen. Mm-hmm. And given the current valuation, it's basically market expecting there will be a lot of growth. For my liking, I'm yet to see the demand side of things. So how you thinking about the demand side? Like, when do you think that will kick in, or your thesis around that?
Yeah. So I think how it's currently valued is crypto AI identity in Sam Altman's
Yeah.
side project or co-founder project or something like this. And I think that's where we are as an ecosystem or as a coin. And my bet in doubling down on it recently was simply the idea that it would re-rate to become more of an ecosystem play and potentially a super app, because now they have this mini app architecture where any developer can come and build apps leveraging the identity protocol to do other things like polling information. There's projects doing survey based things where they're knowing that you're a human and answering questions is useful data. Or airdrops. A lot of projects have, Layer 0, I think earlier this past year, had a lot of trouble identifying like who's
Worldcoin
a human.
solves that.
Yeah, they call it like a Sybil resistant architecture. And they had to actually go back and change some of their philosophy, Brian Pellegrino and the team, which was the right decision. Obviously the bots got upset, but it was the right decision. And rewarding actual people for actual behaviors on your network. I don't love airdrops to begin with, but if we're going to do them, we should at least airdrop to humans, not bots.
Yes.
And Worldcoin can solve that.
And I feel like there'll be explosion of AI agents as well. Like we're already seeing early signs of that. So there's a pump.fund for AI agents now. And I kind of feel like proving on-chain that you're human will become very vital. If, let's say, blockchains do not scale to, let's say, 100,000 or more than 100,000 TPS, maybe there could be some sort of humans pay X amount of gas fees, bots pay X amount of gas fee, like price differentiation. So I think there are the interesting things there as well. On the gaming side, from Animoca side, I can tell you bots are a big problem in gaming. And especially if we imagine on-chain gaming, I mean, you need proof of personhood or else you won't be able to differentiate whether it's a real player or somebody created a bot and just farming the tokens on that front.
Yeah, and it's a big cost to the project if the game developer is incentivizing all these bots, and it also is distorting to the market participants. If we want to go out and buy this gaming token and we think it has 1 million users, but it actually has 50,000, right? Because the other 950,000 are bots. We're making worse investment decisions because we're getting bad data.
You just attended Dawn Gateway. What are your thoughts on Dawn? You're also an investor there.
Yeah, we've been invested. I went last year to validate our thesis in the ecosystem. It was bigger. I think it was 2 or 4 times larger in terms of number of participants. The venue was nicer, and there's a lot more builders. It was also more geographically dispersed in terms of the attendance. I don't know if that's because of Dubai generally is becoming more international every day, every week, or the Dawn ecosystem specifically. But you saw more developers from Southeast Asia and other places. Of course, Pavel is famously Russian native, and some of the core team is as well. So that last year it showed itself, and just more Russian folks, but this time they were still there, but there's a lot more people from a lot more places. So I thought that was very positive. And we're talking to a couple of teams in the ecosystem about their fundraising plans.
You mentioned you don't like airdrops and such. Walk me through that.
Yeah, it's just like paying people to use your thing. I think is always tricky because you're incentivizing a short-term behavior with the hope that they either get used to it or like the service so much they keep coming back. Uber gave away $5 or $10 for rides initially, and I think referral links can be better. I think ICOs can be even better, and I really think the airdrops can also incentivize. It's great if you're trying to incentivize TVL, or it's great if you're trying to incentivize signups or all these things, or having a Reddit account that posts about Definity in 2016, you got like 200K or something. It's not clear that those users are going to stay. And I think the capital can be better used, basically.
Yeah, and it can be gamed by the team themselves. So let's say if you're the one designing the airdrops, you know what will be the metrics, KPIs that you have to hit to get those airdrop. Yeah, so if somebody internally knows this, they can create wallets and just hit those KPIs. I feel like that's another reason why something like Worldcoin is interesting. You mentioned ICO.
Yeah.
Should ICO make a comeback?
Oh, absolutely. Why? Yeah, I mean, I think ICOs were leveled the playing field for everybody, right? Sitting in, my mom's, attic or whatever in 2017, I could conceivably participate in the Polkadot ICO or the Cosmos ICO or Definity or Filecoin, list goes on, ICO at the same level as some of the biggest investors in the space at the time, like Polychain and others. And they got in the same valuation. Yeah. So that seems pretty fair. Yeah.
Why do you think it didn't work out in 2017, 18, 19 era? Like why? Yeah, I know that it was because of regulation, but apart from that, do you think there were other reasons why it just didn't take off in a way? Like
which part didn't take off?
The ICO did really well in 17, 18, 19,
Yeah.
but we don't see projects doing it anymore. I know there's a regulation part, but that's apart from US, you can still maybe think about it in doing other ways, but you don't see that happening. What you see is more airdrops, more launch pool type thing on Binance.
Yeah.
Do you know, like, have you thought about why that is occurring? Like, why hasn't it made a comeback again?
It's all regulatory.
Okay.
I mean, you've had a 4-year Democratic administration in the United States that's appointed someone who doesn't believe in crypto as anything beyond this kind of fake idea that it's just used for drugs, basically. And I think that's, it's really too bad because I don't think it's actually protecting investors, as evidenced by FTX and many other kind of frauds that occurred under the same watchful eye. And I think it's actually pushing investors to invest in, not to call meme coins junk, but a lot of junk, because that's where they can get in at the same valuation as, everybody else basically. And it seems more fair than a company having to stay private until they basically launch, which you have now with projects that have to come to market at a $4, $5, $6 billion valuation, and they have their community in terms of token holders is 7 funds in their LPs. So that's obviously it's not good for the industry, and it's not good. And then you have a listing kind of mafia, right, where there's only 1 or 2 exchanges that can extract 10-15% of their token supply, and that's obviously, it doesn't feel fair, right? We just saw a bunch of projects fall on their face that were very excited because of stuff around this, in large part with Scroll, for example, in terms of its launch. Not to say it won't come back, but they had to give up. I've heard rumors, publicly 5.5%. I've heard rumors of higher than that. So you end up with all these distortions in the market because projects can't fundraise from the public, right? And maybe, I don't know, this is probably more of a reach, but maybe that hurt Ethereum, right? Because one of the first killer use cases was the DAO. And I know the DAO didn't work, but it proved you could do decentralized, permissionless, global crowd fundraising. And now that doesn't happen anymore. And maybe that's hurt Ethereum. And another point is, I think it did work out. If you look at the top 15 coins, X meme coins, X stable coins, so maybe that's 10 coins, they're all ICOs outside of Bitcoin. So you have, Avalanche, you have Polkadot, you have Solana,
BNB,
Ethereum, BNB, and they're all ICOs. And maybe correlation does not equal causation. Do you think the excitement
that Polkadot got early on, ICO played a part in that because the community could participate?
Totally. Yeah, I don't think they would have had so many people excited about them if they didn't have any upside in the potential project. I mean, it sounds simple because we say it all the time, but it's a big part of these networks and these chains.
What do you think about Memecoin? You kind of did say it's a bit of a junk. What do you think about Memecoin trend in crypto? Is it something kind of investable from a fund perspective? What are your thoughts around meme coins in general?
I think it's a phenomenon of what we're talking about. I don't think meme coins would be as big if they'd still be around. Doge has been around since it's been over 10 years. So they'd still be around. But I don't think they would be the meta, the game that everyone's playing if people were allowed to invest in other projects. They're just simply not allowed.
Yep.
Yeah.
Yeah. My mental model for meme coin is the TAM is kind of constrained by the gambling sector.
Yeah.
Or maybe a mix of gambling sector and IP.
Yeah, I think there's definitely some of that.
But you can also have that from NFTs, right? You can also have IP on the NFT side, but there's a reason why maybe meme coins are doing better than NFTs.
Oh yeah.
One reason is just, as you mentioned, the high FDV, low float, basically retail has realized that the game is fixed internally. Less opportunity to make money, but at least in this, there is a sort of a punt they can take and maybe make more money than, let's say, with some of the exchange listing dynamic and high FDV, low flow type token dynamics that have come into play.
Yeah, exactly. And I think between meme coins and NFTs, I think it's actually pretty interesting to analyze that, the difference there, because NFTs were the meta at one time in 2021. And NFTs are a lot more top down in terms of, hey, here's the brand, the bathing ape or whatever it is. Bored ape, yeah. Shows how much I do NFTs. And here's the brand, here's the NFT, here's the collection, go buy it. Whereas meme coins are 100,000 of these things are launched every day or two, and the market itself can then identify and surface the ones that are most successful. So it's much more ground up.
And also NFTs has this amazing utility type thing as well. Like Godzilla Off the Grid is going to get released, and those NFTs play a big part in terms of you have to decode your skins, your all of these things, and for that you need to have these hex NFTs, which kind of act as nodes. So also has that utility part, which is interesting, at least from the gaming perspective. Like in gaming, you need to own your in-game items and in-game property, and I think NFT plays a big part in that. You were exploring different ecosystem. You mentioned Dawn. Are there any recent investment or categories that have excited you? Maybe from a venture perspective or kind of maybe from a liquid venture perspective?
We've done a couple more ecosystem-based projects in the past 3 or 4 months. I wouldn't say we've been terribly active on venture investing the past 4 or 5 months, but we have made some investments. So and across a couple different ecosystems. So we're also seed investors in Say, as you mentioned, and so we backed a project called Silo. I think Multicoin led the round. We invested as well, and it was kind of a cross-chain MEV, and their first validator client, it's like a Jito-like client, is on Say. We invested in Puffpaw, which is a kind of consumer-led DePIN project trying to incentivize people to quit vaping on Verichain. We invested in Enzo, which is kind of intense. We believe eventually intents are the right way to do bridging. I mentioned a lot of the early bridges we were very excited about, and indeed our fund was kind of very focused on cross-chain in the early days. But intents are maybe the correct way eventually to do that cross-chain activity. So we invested in Enzo, which we're excited about. And then on the Solana side, our most recent investment is Fragmentation. So it's kind of LST, or it's kind of like the EtherFi to the Jito on Solana. So we really liked the team there, and obviously the ecosystem is our biggest bet. So
it kind of feels like you guys have been very active on infra, DeFi, Introp, maybe one consumer, which is consumer DePIN intersection with Puffpaw. Are there any verticals that you think, on a forward-looking basis, that you think could be interesting or that you are exploring and would like to make more bets on? Yeah,
I mean, the reason why we like DePIN and Solana and Worldcoin and Telegram and Ton are because of distribution. We think the tech is getting better all the time, and it's important to start distributing that tech. So our key this past year or so has been, let's get more wallets. I feel like we've reached a saturation point in terms of the number of people that want to self-custody Bitcoin in the world or crawl through Glass to use some of the L2 and DeFi ecosystem on Ethereum. And really, at this point, we need ways to incentivize people in the world to get wallets. And so one way is through the Orb and Worldcoin. Another way is through all the different DePIN use cases that are bringing on a crop of users who maybe want to do something in the AI GPU space, or maybe want to, have a secondary mobile phone plan, or GeoNet is something we've been talking about between the two of us, and being able to identify drones with precision accuracy, and those users are not necessarily crypto natives. So DePIN is a category in that. And then third one is the sixth biggest social network in the world, the only one of the top 6 that's allowed to have a token legally, which is Telegram. So they can activate their user base. And similar to, I think, the DAO moment in Ethereum in 2016, was a way to prove out that we could do this decentralized capital formation. And it didn't have to work. It just needed to prove that for ICOs to become a big thing. I think these clicker games, well, silly on the surface, prove with dogs and hamster and Notcoin on Ton that you can distribute to 20, 40 million users in one day, and half of those will claim to exchange and half of those will claim to the actual
and there are other
wallet.
vectors of monetization. I've heard with Hamster Combat, they're monetizing through YouTube videos and YouTube ads. Once you have that distribution and supply side sorted, then you can focus on demand, and there could be different vectors of demand coming in.
Yeah. I think that's right. And we need to make sure
that's what the expectation with even Worldcoin is, right? Like once you have the supply side sorted, then let's focus on demand side, and you can monetize it through actual cash flow.
Yeah. Some of these folks will be unbanked and they can use it for payments or answering surveys and receiving rewards, like I mentioned earlier, and other use cases. So the distribution for us is key. So we're kind of marrying with our current positions in the book. We're kind of marrying distribution with these visionary post-economic founders, and I think those are the two big themes of our portfolio right now.
Walk me through what are some of the qualities you look for in a founders, or historically some of the bets you have taken that have done really well. What were some of the commonalities in terms of the type of founder, the qualities they had that you now have it in your mental model that you're looking for that checklist?
Yeah, I mean, so typically, this is unrefined thought, but typically I leave interactions more drained than like energized, and if I'm meeting with a founder and I'm the one leaving energized, I think that is a pretty good indication that this is a high energy founder. And I think, and I don't, I haven't been able to interact with like Pavel, for example, or whatnot. But I think at the early stage you do get to interact with them. During COVID, we didn't, so we're meeting founders a lot more in person now before we invest. That was a learning. And if I leave those interactions like energized, I feel like, for example, one counter to this is Noah from Pump.Fun a couple years ago, and he was doing a project called Baton, same project, and it's our same company, and we passed on it. But he was like, I'm in London and he spends a lot of time there, so we get dinner every now and then. I always leave energized, so that's a pretty good indication that they're an exciting founder. And if it's attracting me, I'm sure it's attracting other people as well who will want to invest money or invest their time and join the team. Does the founder have that ability to attract capital and talent? And there's probably a lot of heuristics within crypto where you could go, this guy or the girl is more likely to attract capital and talent than others. And maybe that's one way I'm able to identify it.
It's sort of a vibe check that you feel energized and that they can sell well as well because of, Now you guys are a multi-asset sort of a manager. You guys used to do a lot more crypto venture investing. What do you feel are the unique challenges now in crypto venture investing that has kind of also prompted you to be a bit more diversified and also look at other avenues of investing?
Yeah, I was actually talking to someone about this yesterday. It was one of the guys you introduced me to in Dubai, because everybody here, it feels like. And we were chatting about how our books looked, and they looked kind of actually pretty similar in the way we constructed it. And I think the consensus was that what worked in 2021 isn't working this time. And that's identified by one of our funds from 2020 fund that hasn't performed up to the level that we want. And then also seeing many other investors kind of over-index on this idea that they could invest in this really long tail of assets that are, yes, venture-backed, maybe 10 mil valuation to 50 mil, and this, that, and the other, and launching on this chain and copying this idea. And those ones have done just really crap. And so this idea that you could just like be in all these altcoins and therefore because you're in altcoins, you will outperform Bitcoin. Well, it's just proven to be not true. What really opened my eyes to this year, that this has already happened. I just don't think a lot of people have woken up to it. It was Pantera's report at the beginning of Q3, which said, hey, for the first half of this year, not only is the biggest altcoin Ethereum down, but the average altcoin in the top 400 is down 11 or 12%. And that's in a year where Bitcoin's up, close to 50%. And so really the only places that you could have made money this year are Bitcoin, Solana, Ton, and Memecoins. Everything else is like not doing great. Everything else is doing pretty crap. So,
or maybe some AI plays like Tau, BitTensor.
Yeah, maybe. Yeah.
It's still small.
That one's done well this year, has it?
Yeah.
Yeah.
It has done really well.
Yeah. Yeah. Crypto AI is definitely one that's probably escaped some of this, but in terms of the larger caps, it's few and far between. So kind of saying, hey, I'm going to own all this really long tail of assets, and it's a lot harder than it used to be when we started the fund, because the market's more discerning. There's a lot of indigestion, as Tushar put it, mainnet in the venture market, where people have these kind of portfolios of projects that they wouldn't otherwise have invested in today, and they have them on their balance sheet, and there's acquisitions going on at distressed valuations where Coinbase and Alchemy and Phantom and others are coming in and buying these acquiring these founders and acquiring their technology for 10, 20, 30, 40 cents on the dollar with equity and getting great deals. But these founders were able to raise at that time when they maybe should have been employees at some of these bigger outfits. But because the fundraising environment in 2021 was so heady, they went, hey, I could strike out on my own, raise it a $50 million valuation, and try my luck to see if I can do something bigger. And now they're back at those companies as employees.
Yeah. I think one of the other things I would like to add is there's also fragmentation of attention now. So if you do invest and the token gets listed and gets liquid, it's not getting the same bid it used to a couple of years ago. I feel like one dynamic that has happened is there are now 9 million tokens out there, thanks to projects like Pump.Fun and their equivalent in every ecosystem, the 9 million tokens. I think there is that fragmentation of attention. So let's say, for example, with Ethereum, you have multiple beta plays on Ethereum, like you have Lido, you have EigenLayer. So even as a retail or even as an investor, you do have multiple choices, which kind of reduces the liquidity, kind of reduces the bid in one particular token, which I felt like has also impacted the returns for funds that their tokens are going live. And also the cliffs investing. I feel like there has been that movement where 1 year cliff, 3 year vesting, standardized, which I feel like it's changing now a little bit.
No, exactly. And the 1 year cliff, 3 year vesting, and you feel like it's changing and getting shorter?
Yes.
Yeah.
Yes. See, it's kind of funny, like exchanges brought that dynamic that you have to have 1 year cliff, 3 year vesting, standard Binance playbook. But now the kind of retail feels like high FDV, low float is not something they're comfortable with. So there's now leeway that they're okay, like let's have at TGE, let's have sufficient liquidity, rather than just putting everybody on 1 year cliff. So I feel like that's changing a little bit. But then there is that regulatory thing in the US as well, that you have to have 12-month cliff. So it's kind of interesting in different geographies, these things kind of play out. But I feel like there is that interest now to kind of reduce that cliff investing, so there is a bit more liquidity out there. Curious to know your thought, like whether I think you were a proponent, like you did say ICOs are great. Do you think this 1 year cliff, 3 year vesting, standardized thing makes sense, or do you feel like all of the tokens should be unlocked day one? Like, in terms of your spectrum, where do you lie?
Yeah, I think all of them day one might be a little bit aggressive, but Polkadot, it was all in 2 years. Solana, I think all of it in 9 months post TGE. I think that's right, like 100% after 9 months. And that worked out tremendously well for them. I've seen others, do liquid all day one. It hasn't worked. Anoma, one of our portfolio projects, recently announced that they were going to do something similar to that.
Anoma, the intent one? The intent Cosmos?
Yeah.
Good.
Yeah. And we'll see how that works when they launch. So I don't know if there's necessarily a one size fits all with the vesting piece. 4 years is an awfully long time in crypto, but hey, we opt into those all the time. So
I think sometimes there isn't much thought given, like just speaking from a gaming perspective, right? Like sometimes with games you have a life cycle of 1 year, 2 years, and I think the unlock should kind of play into that? So let's say if the whole life cycle of a product is 2 years, why have token vesting for 5 years, 6 years? Because majority of the revenue and majority of virality and network effects will accrue in those periods. Doesn't make sense to kind of have 6 years where this would not work out. So I kind of feel like sometimes, as just a quick heuristic, people were like, okay, 1 year cliff, 3 year vesting, let's go. But I think there should be a bit more thought in terms of how does the tokenomics align with the product roadmap or the life cycle of the product itself.
Right. I could see, I mean, we're not big game investors, but I could see how a lot of them tend to come and go faster. So doing a shorter vest works.
Each year, like there is a new edition of FIFA, right? Let's say, this is kind of reasoning by analogy, but let's say you invested in FIFA 2020, but you put the vesting 4 years, and next year there's FIFA 21 coming. Like, how would you feel, or how would you kind of, as an investor, this wouldn't work, right? Like, but I feel like with some of the gaming, that has been true. Where project would not think about it, but just like 4 year, like 1 year clip, 3 year vesting.
It feels like intuitively. I mean, my gut feel is that shorter is better, because the longer it is, the more distorted basically this low float, high FTV game is.
Yeah.
And so by having it shorter, you're basically ripping off the Band-Aid for everybody to find a clearing price for these assets, because nobody takes a lot of these, low float high FTV token prices seriously, because the vest is so long.
And do you think the value is also moving up the stack in Web3? I mean, historically, a lot of infra did really well, a lot of middleware did really well.
Yeah.
Do you kind of feel like there is just a lot of that out there now? And like from the deals you're seeing, from founders you're speaking, do you feel like the value is now up the stack? It's more interesting to invest in Dapps than, let's say, infra?
So I think Pumped Fund's the fastest company ever to make $100 million in revenue, like in the past 12 months, basically. And so they're up there. But then if you... Ryan Watkins from Syncrasy just put out an apps graph and blog post, accompanying blog post that's really good, encouraging everyone to revisit the Fat Protocol thesis. And basically the result was the top 25, there's like a chunk of them, like I don't know if it was half or more than half, that are apps. They tend to be apps that are facilitate token transactions. So the creation of Memecoins being Pump, or Uniswap being a DEX, or I think Aave's on there, and Base is certainly on there, and others. But so I think the kind of the DeFi, the finance piece of applications are getting the most revenue. We've been looking to other potential ways that you could see on-chain revenue.
DePIN, like GeoNet, for example, making 2 million.
They've made 2 million so far?
ARR,
Yeah. Is that the highest grossing DePIN app?
The other DePINs that have made more.
Okay.
I think might be Helium making a bit more.
Okay.
But yeah, their ARR is 2 million, and they're using a lot of it to buy back tokens. So kind of like similar to DeFi and DePIN. So one thing with DeFi is the moat sometimes can be weaker than, let's say, DePIN. So let's say if you do increase fees, or if you are trying to accrue value in the cash flow side, the traders and liquidity might go elsewhere because of the nature of DeFi. If you're managing risk and you have that network effect, let's say Aave, for them, they can perhaps accrue more value and more cash flow on the longer term. So I think one of the things why Uniswap made a uni chain was I think they couldn't increase they couldn't do the fee switch and accrue incentives and cash flow for the token. So they had to be creative in terms of how token accrue value.
Because now it's going to be a staking token, or
they can you use it for gas fees, right? On as L2. But let's say if you do a fee switch, let's say you decrease the incentives of LPs, basically they'll go elsewhere. And in terms of the users, 10% are on the front end, 90% of the users are on the back end. So the argument that people are habitually using Uniswap also kind of proves you wrong, because only 10% are using it. So there's a switching cost of that 10% user, but 90% are like all algo based, right? So they don't care about Uniswap. They care about the best price discovery or best bid ask spread. Like, so they can't do fee switch, or else the traders will go elsewhere, wherever they're getting the best lower price. I think in terms of DePIN, it's the other way around. Like when you have moats, there is, so let's say in case of GeoNet, they're one of the largest RTK network out there.
Right.
You are forced to use it. And it's very difficult to just build up a network from scratch. It might take you 3 years, 2 years. So you have that first mover type advantage as well.
I hope DePIN, right, like a lot of the revenue probably accruing to Solana, which is, well, I think one of the highest revenue, like the highest revenue generating entity in crypto. Ethereum's close with its L2s. Is driven a lot by Memecoins, but I would love to see it over time, right, developed, driven by what you're talking about, which is DePIN and GeoNet and Mike and some of these founders. Like when I think about the best founders coming into crypto, a lot of them are actually in DePIN because they have a ton of success, like Mike did in precision GPS, in like traditional world, and then comes into crypto and applies it here because he sees an opportunity to bootstrap this network using crypto economic incentives. And then, the Resi founders doing that with Blackbird, with these loyalty programs, first in New York with restaurants and then elsewhere. You're seeing that with, before we came on, you were talking, I think, about a project that one of our friends at Frictionless led called Dawn. I think that one of their founders is...
Yeah, they're also making a lot of revenue.
Yeah, and one of their founders is from an incredible background. And
even the Hive Mapper founder,
right.
He worked at Yahoo Maps, so...
He like built Yahoo Maps, right?
Yeah,
and
he was part of the team.
And that wasn't really a thing. Like as much as I loved NFTs, like that wasn't much of a thing of like, wow, this really accomplished like super founder who's sold businesses is now coming into crypto to do it. Because he sees the biggest, or she sees the biggest opportunity within crypto for that. So that's a new, very bullish thing that we haven't yet seen flow through to revenues, but maybe we do soon.
I think the beauty of our infra was there was like this element of moneyness, which is kind of a bit vague. So money could be anything, and money it's kind of like a story. So it could be 5 billion, 10 billion, 1 trillion.
Yeah.
Whilst Dapps, you have to show cash flow, and there is a fundamental DCF type thing that you have to do. So I feel like with infra, one advantage they had, like, I think the space is still figuring out what will be the money. So because of that, there is a...
we know what will be the money, right?
Some of them.
It's Bitcoin. Yeah,
I think Bitcoin will be store of value. I think,
right,
Ethereum, Solana. Still kind of forming my thesis on...
Well, the money stable coins. And the store of value is maybe we're decoupling exchange, medium of exchange, right? Money is medium of exchange, store of value, and what's the third one? Unit of account. And so maybe we're decoupling the first two, and you have stable coins that actually aren't very good at storing value because they're being inflated to 8% or whatever the new increase in M2 is per year. And then you have the store of value with Bitcoin. But I think that's settled. I think Bitcoin is the best store of value.
I think that's settled. But I still think the unit of account, the medium of exchange. So let's say if you go on Solana ecosystem, okay, people are still doing like stable coins, but things will be quoted in Sol, like whether it's NFTs. And then they also have their own natural network sinks, right? Like you have staking, you have restaking, all of that stuff. So so because of that, you can't argue that Solana, like you can't run a DCF on Solana. Maybe you can run a theoretical DCF on Solana if you're capturing the MEV value. But I think there's a mix of MEV value plus the moneyness, elements of moneyness that kind of gives them higher valuation, which is also very difficult to kind of value. Whilst with these dApps, like let's say GeoNet, you can be like, okay, it's making 2 million now. Let's attach a 20 multiple, so it should be valued, let's say 40 million. Maybe, it's trading at 100 million, it's a bit expensive, whatever. But I feel like with some of the L1s, because of that story element, because of that moneyness, it's difficult.
So you feel like moneyness is difficult to value because of course it is, like or store value,
but
like gold.
It's big, right? Like
it's what people will pay.
Yeah.
And then you have apps which are you're saying are and you can run these cash flow things like the Thea Capital guys do with their picking of Felipe picks coins based on that. And then this third kind of infrastructure L1, we have consensus that there is no consensus.
Yes. Yeah. So I think the debate is, there will be few L1 ecosystem that you can say is sort of a money, but the TAM is so big, the expected value people are assigning to these ecosystems still remains really high. So let's say if Solana becomes money, maybe the market cap should be 2 trillion or 3 trillion. but it can and cannot happen. So you also have other competitors trying to take like a piece of that. So these ecosystem then also get like a higher valuation because they're also competing in the same ballpark, like same type of instrument. In terms of cash flow, I don't think. Okay, maybe you can argue with Ethereum, but even that I wouldn't say it's cash flow. It's more like commodity. It gets burned. It just doesn't produce. Maybe on the MEV side it does, but yeah.
Yeah, I mean the controversy there is that it's giving up its MEV, right, to the execution layers.
Yes.
And that's why perhaps it's doing more poorly than say Solana, is because it's giving up its execution fees to Coinbase with Base or Arbitrum or OP or whoever else, and it needs to now subsist on this like blob fee or I guess that's really cheap and doesn't seem to be working very well for them. Yeah.
What are your thoughts there? Will Ethereum accrue more value or the L2s will? Given what you have heard or given your...
I think in terms of valuation, like Ethereum valuation will be larger than the L2s or the L2s combined for some time or maybe forever, I'm not sure. But I think, in terms of owning Ethereum, I think it's been really hard for those holders for a little while now. I mean, it's really hard. It's the 30th biggest asset in the world, like the 35th or whatever it is. It's like top 30, Yeah. So it's hard to make that go up, especially when it's competing. It's like lost on the money store value piece to Bitcoin, and it's losing on the utility piece, like the tech piece to Solana, and that's why you see net outflows from its. Like the ETF is like a negative for Ethereum. It's like $500 million or something net outflows. So it's just, it's hard to pump the 40th biggest asset in the world, especially when it's having this identity crisis between those two pillars I mentioned.
Yeah. So who are some of the investors or funds you admire in Web3, and what sets them apart in your opinion?
Yeah, I mean, Multicoin I think is probably the best, or at least lately, right? It's hard to argue with that. I think there's consensus or growing consensus on that ex-Ethereum community perhaps, and so they've been doing really really well, and can learn a lot from them, and then there's a whole host of other investors that just have different styles. I mentioned on the quantitative side at Atlas, our hedge fund, it's actually a multi-manager. So we allocate via SMA to like 5 managers at any given time. So I've been able to learn a lot I think we brought on 8 managers and now we have 4 or 5 left. So we've had to cut a couple, and they're all doing different strategies. And one of the one I've enjoyed most, and that's been most applicable to, our fundamental side of our business is the DeFi managers. So the DeFi managers, and there's some really big ones now, like $200 million. You're seeing net inflows there on the hedge fund side more so than almost anything else. And I think that's because of the leverage restaking trade that's been available at basically very low risk, because restaking has no slashing risk, and there's no depeg risk because staked ETH on Aave doesn't point to staked ETH price, it points to the ETH price. So anyway, like leverage restaking has been 50+% annualized yields all year. Then you've had the launch of a lot of projects like Treehouse and Elixir and Ethena that are doing these liquidity programs and giving you to bootstrap TVL, they give you some governance token after a year or 9 months or whatever it is. And those have been really big winners for those funds. In addition to their bread and butter MEV, market making, DEX, SEX, arbitrage thing. So I've seen a lot of inflows there. I've really enjoyed working with those managers. It's gotten me sharper on the DeFi side because I come from an infrastructure Polkadot background and building community and ecosystem and all of that. So I've enjoyed that, and I think those funds will continue to see inflows. And the other thing I've learned is just how far we've come over the past 3-4 years. Like we take it for granted. Like
Trump launching
what?
Trump doing an ICO.
Yeah.
Sort of like, could you have imagined that in 2020? Like Trump raising money for a crypto project. I think that's how
it's the end game for stakes and university, and eventually you have to launch a meme coin, right? Brian Johnson selling olive oil. Eventually, maybe he'll launch a meme coin. But I met also on the prime broker side, like Coinbase Prime. They used the name years ago, but now it's actually like a prime. They're extending credit, really good UI and product. They're doing credit checks to decide how much credit you get. They have the offshore perp exchange, like the borrow and lend is really there. And then you're seeing also hidden road partners on the prime brokerage side give you direct market access to these underlying exchanges with these exchange risk insurance products. So you're insured on your sub accounts at Binance or OKX, other places. And that really wasn't around much then. And then you also even have other OTC, but also primes like Falcon X provide direct market access. And no more are the days where you can go around with a piece of paper that says we're worth $2 billion and get a bunch of uncollateralized loans, which is what Three Arrows was doing,
yes.
right? And we made the mistake of lending them a ton of Bitcoin too, like hundreds and hundreds with that piece of paper. It was a different time. Luckily, we didn't lose any money with them, but. We had called all of our counterparty risk back by early 2022, but the space has just totally matured on that side, and that brings in more sophisticated players, more institutional players. And so that's whenever you hear like Paul Tudor Jones or on CNBC 2 weeks ago to be like, all roads lead to inflation. I'm long Bitcoin. I'm long gold. He's using these, with CME also going to be providing options on top of their ETFs. I didn't even mention the ETFs, but that's a huge deal.
Yeah.
Big deal. And so I could see, I think this is just all, structurally really, really, really bullish.
Yeah. You mentioned Three Arrows Capital. Are there any trends or practices in crypto at the moment that kind of frustrates you? Your pet peeves in crypto, basically.
Pet peeves in crypto, I think VCs need to do a better job of basically demanding rights. I think they need to be on boards more often. I think they need to have some transparency more into financials during those board meetings. I think they need to have more transparency in terms of the founders selling secondaries into rounds during those board meetings, and I think they need to, not give away everything just to get in the round. And I think now that venture dollars are a lot harder to come by for projects, you're seeing second-time founders taking months to raise and the first project successful and is still taking a month or 2 months, 3 months to raise their second, shows that venture dollars are harder to come by. The past quarter or two on those graphs that show venture dollars over time, it's like careened off a cliff. And partly funds from 2021 vintage are at their 3-year investment period and are run out of money. And so, you could also look at all these shitcoins, where are they coming from, as like a demand problem more than a supply problem. It's like if the demand for the dollars are there, people will create these, low marginal cost to create a shitcoin. They will create them. So with that careening off the cliff, like venture founders, and my lawyer, it's also my mother, was looking at my contracts, for the past year or two, and she was like, the contracts are getting a lot better, like in your favor as an investor, like investor protections and stuff. And I think that's a result of the balance of power getting more equal, basically. Because before you would sign a SAFT and you'd have no rights. They could even launch a new coin and you wouldn't get any of that, unless you could prove it was the same funds, which you're not going to sue as a VC because you won't get any more deal flow kind of thing. So I think that's something the VCs, now that we have that power, we should use it to demand a safe plus a token warrant, not just a SAFT. Because then if the value starts accruing to the equity because of whatever reason, you're protected. And I know everyone likes to shit on VCs and stuff, but I
don't think they're making that much money now. This vintage, it's the founders.
It's like that meme. He's already dead. It's like when they keep shooting the body or whatever. Yeah.
Yeah. Can you share a moment in your life that changed your approach to investing, or maybe life in general? Was there a moment or was there an experience that kind of changed your worldview dramatically?
For me, it was a late 2021, early 2022. And then actually through 2022, part of the reason we didn't lean as much into the market as much as we should have in 2023, and this was a mistake as an investor, is blood in the streets, go shopping kind of thing. And we didn't. I was like, okay, I'd been through a founder breakup. I'd been through, a real breakup. I had been through leaving the Polkadot ecosystem and needing to come out and really establish Hypersphere and our company as a fund that invests across ecosystems. And then I had also made a good amount of money for my age at the time. So all of those things made me take a couple months. We were still in the market, we were still around, but I wasn't as focused on cryptos in retrospect as I wish I had been, because I was digesting basically what comes next, which is, where does crypto go from here? Does it come back? How to build a team, how to build meaningful relationships while you're building this business. And you don't need to make really a lot of money anymore or much at all. So what do you want to be doing with your life, kind of thing? And ultimately, circled the wagons and came right back to what I've been doing the past 7 or 8 years.
So you mentioned you went through actual breakup and also breakup with the other co-founder. How did it impact your investment, judgment, or the way you were thinking about the space?
You can also look back on your investing career as, and this is why traders write down what it is they're thinking at the time they make a trade. How are their emotions? How is their sleep levels? All of these, actually, even biological things can affect your mindset, and which can affect, if you're not a quantitative algorithmic trader, which I'm not. All of those things make a big impact on your cognition and your ability to make good, clear-headed decisions, which you need to do if you're an investor. And so if you're going through things in your personal life, if the company there's founder disagreements or problems at the top, if there's any LP issues that you have, or any of these kind of relationship issues, they affect your mindset and cloud your judgment. So maybe the best thing was to take a step back during that period and not make a lot of big bets and kind of go, okay, take stock of what we have, kind of thing. But that in itself is making a big decision, right? Because 2023 was a great time to invest, and we didn't start investing until the midway. I had a couple, an LP in particular, messaging me and be like, "Jack, you got to get back in. And I'm like, "No, I hear you." But it took me several months to kind of process all of that.
So in hindsight, going through that experience, do you feel like when you're going through those big life moments, is it advisable to take a little bit of break and reevaluate things, or do you think you should just forget about it, just move on and just get busy? What was your takeaway? I feel like there are two takeaways here: not trade because your emotions are involved and that clouds your judgment, but then the other takeaway is that you kind of miss out on the market timing.
Yeah, exactly. Yeah. So it's there's no correct answer, I don't think, because damned if you do, damned if you don't. Yeah. I guess what you're hearing is my frustration with myself that I didn't process faster, basically, which I don't know if is fair to myself, but yeah, no, you have to go through those moments and know you're going to make it through stronger.
Okay, so let's talk a little bit about outside of crypto. Mm-hmm. What are some of the hobbies that you do outside of investing, and maybe those hobbies translate into you becoming a much more well-rounded individual and also a good investor? What are some of the things you engage in outside of crypto?
Yeah, I like to hike, and I like to scuba dive. I have a place that I call home, part home in the Bahamas, and I'm going to learn how to spearfish this year, nice. which a lot of people and a lot of Americans go to Puerto Rico to do. And I like to read. Yeah. And I was dyslexic growing up, so I was a little bit slow on the uptick to read, but now I read a lot, and I read as much as I can. And I think that is one of the great gifts of civilization and humanity, because we have all these lessons from other people, and it adds to your empathy and your perspective if you're reading the right stuff, reading good stuff. So those are things I like to do. For me, nature's really healing. Nature's touching grass is good. But the hiking and the three things I mentioned in the beginning do that.
You told me you were learning how to fly as well.
Oh yeah, I'm learning how to fly. I have been learning how to fly for a little bit too long now, and it's so fun. Yeah, I really like it. It just it's like heavy workout or something like that, where you're just kind of lose yourself because you're so focused on the thing that you're doing, which is nice for people like us who are focused on work a lot. It's nice to be focused on something else.
You read a lot. Do you have any recommended reading that changed your perspective about how you see Web3 or investing for investors in general out there? So let's say somebody who's aspiring to be an investor or who's joining the space. Are there any recommendations that kind of change your viewpoint of crypto, Web3 investments, life?
Yeah. Oh, for sure. Yeah. I mean, there's so many. Like on the investment side, there's Barbarians at the Gate, More Money Than God, Market Wizards.
Market Wizards is great.
All of them are good. They're all great. Reminiscences of Stock Market Operator. The list, there's like 10 or 15 of these you just have to read. And then on the crypto side, I think what made me make a lot of life decisions differently and indeed pursue crypto more fervently is the Sovereign Individual, and it has a new intro by Peter Thiel, which I've heard is really good, and that's kind of this idea of it's written in '96, extremely prophetic, and what it foresaw coming, and it talks about nation states and where they sit in their life cycle and what could come next, and talks about crypto or cryptography. So talks about taxes and talks about the demographic issues that have been baked into the cake for 10, 20 years. Because these things, we know how many people there are going to be, in 20 years, because we can see who's born today, kind of thing. So yeah, it's good. It's good. I'd recommend all of those. The Bell Labs book is good on the crypto side in terms of ideas. I think Chris Bernitzky put out a list earlier this year of like 30 or 40 of these, and I think they captured a lot of the ones I just said.
And do you feel like so in crypto, 10 to 14 hours you're digesting pitch decks or just networking with other individuals? Do you feel like you have to read those things end to end or maybe multiple times, or do you feel like you can also get a good gist of them through reading summaries?
On the diligence side?
No, on the book side.
Oh, book side.
Everybody in crypto is busy.
Busy. I subscribe to a newsletter called 13D, and it's one of these expensive but really thoughtful newsletters. And they had a piece. They're doing a lot on the depression, anxiety, social issues of Gen Z, and how it's unique to this generation at this point in time. And it talks about a New York Times article this past week where it was citing the number of kids, students, college age, high school age that are reading books end to end, and how it's basically dropped off a cliff.
Yes.
To where these kids can't even concentrate to get through a full book. So I think it's edge. Like if you can sit down and read a book that is a high quality book by a good author that gives you a lot of critical thinking ideas and ideas around that, then I think you have edge.
Yeah. I kind of also noticed that as I'm aging, right? Because of Twitter, because of I don't use TikTok, but I do consume a lot of Twitter. There's so much digital consumption that you kind of lose that focus a little bit.
Yeah.
I feel like when I was in university, high school, I could just focus 3-4 hours, but now because of crypto, everything's moving fast. Right. you kind of lose that focus. I feel like even if you don't read the books, even if you are able to read articles or research report, I think you're still better than 95% people out there in crypto, because I feel like everybody is kind of losing
one of my favorite
that focus.
Bloggers I found this past year is called Good Alexander on Twitter. Alexander Good is his full name. And he had a funny tweet a couple days ago. It was like, whenever crypto founders and crypto people get out of jail, they're always ripped and they're like, this is the best experience for me, and I've read so many books and it's so meditative. And when normal people get out of jail, they're haggard and washed up and stuff. And so maybe all crypto people could benefit from kind of a more monk-like living, going to Karachi for a couple months a year, or Bahamas a couple months a year, and kind of getting away from the screens.
Yeah, I do that just to get more work done, less networking. This there's no one around there for crypto. So you basically just sit with your iPad and read.
Yeah.
It's good for that. At least I feel when I go back to Karachi. So are there any subscriptions, crypto subscriptions or newsletter that you're subscribed to that adds a lot of value to your thinking and investment journey in crypto?
Well, we spend like $100,000 a year on research. So I mentioned 13D. Zoltan Pazar, who is a Credit Suisse analyst, is now struck on his own.
Is it mostly Web3 one, or you also look into macro?
Mostly macro.
Okay.
Yeah. I don't know if it gives me. I like it. It's intellectually stimulating. It's a different, interesting problem.
And when you're paying for this research, like, is there ability to also get on one-on-one with these analysts to kind of get their sense of the macro situation because you're managing?
Well, Kirill, the guy who founded 13D, has become a good friend. He also lives in my neighborhood in the Bahamas. And so I have the luxury of getting a piece of his time every now and then. And Zoltan I have not met with, but a lot of the other ones do make themselves available for one-on-one time or to answer questions.
We were discussing about longevity and biohacking.
Mm-hmm.
A lot of crypto folks are into that, even myself a little bit. Just tell me about your protocol. What are some of the things you are doing to have a better standard of living and preparing yourself for a better future?
Yeah, well, I got into this a couple years ago. My mom broke a bone and during COVID, and we went to, on the advice of one of my mentors, we went to this place in Switzerland and did this full blood cleaning, iRhythms, all this whole treatment and data and crunching around it. And then they, you do IVs afterwards, you do organopeptide injections, and big fan of the hyperbaric if it's 2 atmospheres or more above. Luckily, there's just a really good hyperbaric place with and this whole gym and sauna.
So what is hyperbaric? Is it, do you get that high altitude effect? Like, what is it?
Yeah. Basically, it's like a lot of pressure, and it turns the oxygen particles into microparticles, and then they can go into and oxygenate your red blood cells. And so if you have a concussion or something, or you have the bends from coming up too fast underwater from scuba diving, you go straight to a hyperbaric chamber. But then also athletes use it for recuperation on their injuries and so forth. But it has to be consistent and it has to be over 2 atmospheres, or else it doesn't work so well. But I found it helped with a little bit with cognition. But I also do the IVs. I do saunas and steam basically every day. And I have this little Oura ring that tells me how well I'm sleeping. I'm not like the biggest biohacker person ever, but a lot of us in crypto obviously like it. Yeah. I don't know why, but I guess we're all tech focused. I don't know.
I feel like if
you go to you touch grass, you look at the sun.
Look at the sun. Wherever I have opportunity to do cryotherapy, do sensory deprivation, do fasting to the stage where I feel I can click the autophagy as well, like 48 hours, 36 hours.
Oh, wow.
I used to lift heavy weights. Now I'm kind of slowly coming back, but I feel like lifting weights is another thing that really helps with your health and longevity. Try to eat fish as well, a lot more fish than, let's say, red meat. Those are some of the things I do. In terms of supplements, make sure I have enough vitamin D and magnesium. Those are some of the
Easier
things.
to have vitamin D here in Dubai.
Yes.
Yeah.
Yes.
Yeah.
But I think sometimes it can also be counterintuitive when you're living in very hot countries. What happens is you tend to go less outside and you're trapped in the air conditioner a lot more. Yeah. So we are coming to the end of the podcast. There are a couple of things before we wrap up. So if you could go back to when you first enter crypto, what advice would you give yourself?
It's a good question. I would say be open-minded about about your bags, about your which is just a way of saying your preconceptions and the ideas you have, and don't make too fast of judgments about people or about ecosystems, but dive deeper. When you hear about something, if you're going to conferences and you're on Twitter and you hear about it, you probably aren't too late. So go ahead and look into it before writing it off as, oh, I'm too late, or I missed it, or there's nothing there. Because another one is probably play with some of the software from time to time in terms of actually trying out the apps, trying out the ecosystem, and coming to a judgment on whether it's easy or hard for you. So I think being open is a really important piece of being in crypto and being an investor.
Do you have any regrets in terms of one or two investment that has kind of left a scar or a mark in terms of you should have done that, you had the opportunity, but just for whatever reason?
Oh my God, yeah, so many.
Yeah.
I mean, it should have
The
bought
biggest-
that,
yeah.
should have sold that.
Yeah, this is just like didn't invest in maybe one or two projects that you felt like you should have, or
Well, I missed. I mean, I passed on Pump.fun twice.
yeah.
So that one's, obviously not very smart.
Or were they
but
doing
there's so
meme
many-
coin creation and meme coin architecture?
Second time they were.
The first time, what were they
Was
doing?
NFT exchange.
So that's different, right? Like
Yeah.
that's, I think, could be again, not saying anything, but could be
But the valuation,
right decision, wrong outcome, because
Right.
NFT marketplace is kind of super saturated.
right? I think also there's a sufficiently discounted valuation to where you are betting on the founder. The worst is whenever you're betting on the founder, but then they're giving you a founder plus good product valuation, like 50, 70 million, whereas like the product needs to be good and the founder. Whereas if it's 10, 20 million, you couldn't just be betting on the founder reasonably.
So you felt like the founder was very strong, but at that moment, maybe the product didn't make.
Yeah, and maybe I was quick to write him off because he was like 19. That could have been it too. Or I could have just been busy. There's a bunch of different things, but yeah, missed that. And then there's a lot of things that we were fortunate on with timing, and but yeah, I have a whole. I mean, the great and terrible thing about being an investor is you see all you could have literally always made a better decision.
Yeah.
You could have bought more, you could have sold, you could have not bought at all. So I was talking to someone yesterday, a really fund I really respect, and they did one of those OTC deals with the Solana Foundation during the depths of the FTX debacle, like 10, 13, whatever dollars, and they were like, "Oh, you did the FTX round, like we should have doubled down." Like I'm like, "Dude, you got in you got in a blind valuation," but you're never going to make the optimal outcome with investing. There's always going to be money left on the table or judgments that go poorly.
Before we conclude the podcast, question I should have asked you but didn't.
Questions for myself. No, I think we covered a lot here. This was a lot of fun. This is the longest podcast I've done.
Thank you, Jack, for joining me. It was a pleasure. I learned a lot. It was great. Thank you so much.
Thanks, Betty. Look forward to doing it again.